it's coming up should be 24,300 plus. It is. So around 24,300 is where the Nifty is opening up, about a quarter higher. The Bank Nifty is up about a quarter, that is 52,342. You got the mid-cap index, which is up about 0.6%. And we're at about 56,540. So that's 0.75% higher for the mid-cap index. And the heat map will start to come into view for the Nifty 50 stocks in just a bit. You got 4:1 advances to decline ratio. So 1,240 stocks are higher, and you got about 360 stocks which are starting in the red. 10 stocks on the Nifty in the red. The bulk of it, I mean, actually, most of the other names are in the green as we begin this session. 60 points to begin this Wednesday morning. Should be.
Okay, let's look at the individual movers and shakers. By the way, I think the stock of the morning can very easily be GAIL. The numbers were below estimates, but I think the market's looking ahead at their pipeline expansion. Stock surging away about 6% higher right now. This is probably one of the best reactions we've got from the results perspective. Titan, on the other hand, is struggling. It's down about a percent and a half thereabouts on what has been a rough patch. Titan, in fact, is the poorest performer on the Nifty right now. And some of these metal stocks are cooling off after yesterday's big rally. JSW Steel, Hindalco, Tata Steel, a lot of these names on the downside. The selling continues on the consumer space. Titan is not alone. Look at Trent, Lever, ITC, a lot of these other names on the weak side of the screen as well. So what's bringing up the green end then? It's tech, and more tech. HCL Technologies, Infosys, Wipro, Tech Mahindra. So tech is having a really good morning. Then you have an element of healthcare and pharma. Apollo Hospitals is the best performing stock on the Nifty right now, 2% up. There is some buying in names like NTPC as well. NTPC, ICICI Bank, these are some of the other green parts of the market. In fact, let me complete the picture on banks. The Bank Nifty is doing better than the Nifty right now. ICICI is positive. HDFC Bank, just a 0.25% gain. And Axis is very, very flat. Axis isn't doing anything. SBI is also totally flat. So Bank Nifty, a bit indecisive. But yes, there is buying on the technology side. And there's a little bit of pharma on the top of the screen today.
Well, that's right. This renewable theme, the solar theme, they continue to move with a lot of traction. You have Premier Energies, that's up close to around 2%, putting on weight after the big run we saw yesterday. Vare Energies, that's up another 3%. Remember, yesterday it was bursting in trade. One data point that I picked up is the export of solar modules to the United States from India grew from around 600 crores in 2021. Year to date, it's already more than 10,000 crores. So clearly, that space seems to be picking up steam. And that's reflected in some of these stocks. Vare listed at around 2,400 rupees. It's already around 3,600. It's a big move out there. Top volume movers. Afcons had a subdued listing. There was a large trade that took place. Stock has recovered. That one, in fact, has moved to the high point of the day on large volumes. MRPL as well is moving very, very well. So both those two, they're the top gainers in today's trading session. Both of them moving up. I think Hindustan Zinc on the downside because the OFS is at a sharp discount in comparison to yesterday's close price. So it's correcting. It's down close to around 7%. Titan as well is pulling back on the back of those numbers. Let's pull up Berger Paints. I think for starters, that number was more or less flattish, I think. Though the numbers appear disappointing, but I think the stock, Berger Paints, has appeared more or less flattish. So a green start.
There's also Mankind. In terms of positive reactions, Mankind's holding on to a gain of about 4.5%. And by the way, PSUs, watch all the PSUs. Even yesterday, the PSU part of the market was pretty strong. And even this morning, NBCC, Aircon, RailTel. So it seems that, so plenty of green.
It is green, and it is looking pretty well bid right now. And we'll sort of have more on the indices. But 30 points, by the way, is what is left after a pretty strong start early on. But just a few other names, maybe we can... Vare, for example, is another one, right? Vare has yesterday hit 1 lakh crores in market capitalization. It's up 50% in 1 week. It's actually a week old in listed markets. So that's, by the way, with a 4% pop, it's still, once again, the biggest volume-led gainer. Look at that, 1 million shares traded and 1 lakh crores in market cap. So, I think it's got to be one of the fastest runs to 1 lakh crore market cap out there. GAIL, of course, Sonal is pointing out, and I think both Surabhi and Nigel highlighted that. Premier Energy, that's up about 3% again. It's a fairly recent listing. Dixon is up about 3%. CDSL is starting about 3% higher. I think we highlighted Mankind. Keynes is another one which is up about 4% or so. What else? Supreme Industries starting with a 4% pop. many of these stocks have come off quite a bit. I mean, Supreme is a well-owned name. And from highs of about 6,500, stocks at about 4,500 right now, after this 4% pop today. Prestige Estates, Sequent Scientific, and EPAC Durables is up another 3-4%. It's been moving circuit to circuit for the last many trading sessions now out there. So that's the broad picture as we look at things. Metals are, as Nigel also pointed out, broadly down. Nothing major, but Tata Steel, Hindustan Zinc, first, there's the offer for sale. There's Nalco, there is Vedanta, Hindalco. So these are names which are down 1.5% at this point in
just
time.
one more thing. PolyCab, I recall, you had quizzed the management as well. Nimesh was telling us they could be winning a large tender. That's come about, just at pre-open. So that stock is up close to around 2%. And I think the management clarified that the margins will be pretty much in line with what they normally get.
So basically, this is for optic fiber.
Yes.
And this is they said they have a small business there. Yeah. And the tenders were worth, they said, 50,000 crores.
Yeah.
And I remember asking them whether they've bid for part of it. They said, no, we bid for the entire 50,000 crores. I don't know, Nigel, if they have given out a number.
4,000.
4,000 crores is what they won.
Yeah.
Okay, so that's the order that we're talking about. We should try and have the management join us to talk more about this as we go
4,099, I got it right.
4,100.
Yeah.
Mota. So that is the PolyCab optic fiber order, which Nimesh first highlighted on D Street Chatter. This is part of the BharatNet project, which we put out their stock. By the way, from those levels is still substantially higher, mind you. So some of this is in the price in that sense. Well, let's welcome in Harish Krishnan, co-CIO and head of equity at Aditya Birla Sun Life Mutual Fund. Great to have you with us here, Harish. Appreciate you joining us. Your thoughts, Harish, as you're also someone who tracks sort of global cycles closely, and you got this big event which is being sort of decided upon as we speak. It may take a few hours, but for emerging markets in India, Harish, as a CIO who manages all kinds of sort of funds and oversees a large pool of money, who's better, Trump or Harris?
Good morning, Prashant. So I think, while all eyes are on the presidential outcome in the United States, I think it's equally important to see what happens to the Senate and the House, and whether we're going to see a sweep or we're going to see a divided kind of a mandate. Markets generally, prefer divided mandates because there is reasonable checks and balances and reasonable amount of policy continuity. A sweep in one side, I would think, will need a reasonable reset of expectations by various market participants. Also, over the course of the last month or so, there has been a Trump trade of sorts. So if you look at the US bond yields, which has risen quite sharply over the course of the last 30-40 trading sessions, clearly in anticipation of the fact that that could be potentially higher fiscal deficits, and that's also played through in terms of the currency with the dollar strengthening as well. So I think a lot of these potential outcomes are already in the price. I think what is going to be the key thing to watch out is whether it's going to be a full sweep or whether it's going to be a divided mandate. And that has interesting ramifications. More clearly, we have the Chinese policy making coming out, I think, in a day or two. They're also watching out this political outcome in the United States because there is reasonable amount of bluster that has happened during the campaigning wherein China has been called out and tariffs and sanctions have been used quite liberally by both of the candidates, and therefore the policy response and the fiscal stimulus from China is going to be keenly watched out for. So I think from an India perspective, I would rather sit and wait out this entire kind of events and then take a far more decided stance depending on all of these potential outcomes.
Yeah, that's very true. Harish, great to have you on. Good morning. I think by the same time tomorrow morning, we'll be back to discussing, okay, forget US, it's over and done. Now what's happening to our earnings, right? That's how it moves. But, we had a guest earlier on the program, a foreign guest who was making the point that irrespective of the outcome, and especially if Trump comes in, you can't take away from the fact that the first big trade is likely to be to buy home assets. US large caps, US mid and small caps, which have been ignored up until now. So if that happens, and if the US remains the preferred port of call, at least for foreign investors in the near term, then what? Because we've just coming off a really difficult October. Do you think the worst of the India correction is over?
So I think part of the reason of the correction and the severity or the ferocity of the fall that we've seen in October is potentially a catch up for that excessive buildup of market cap that we've seen, especially in the last 6 months or so. I specifically call out the last 6 months primarily because there were three key negative developments. You had an electoral verdict, which wasn't really what the market was anticipating. You had capital gains taxation being tinkered. And then you've got now 3 consecutive quarters where earnings numbers have got cut downwards. And therefore, some of the reaction is to take into account each of these 3 events. I think the point that you're referring to is that where do the flows move, especially when we have seen close to about $12-13 billion of outflow over the course of the last 20 or 25 trading odd sessions. The sense that I get is for a lot of international allocators, India is now moving to a must-own category. From a small peripheral kind of an allocation that many global allocators had, I think that India is coming onto the center stage. The only point of worry that most capital allocators always had was the excessive valuations that was there. And a lot of that froth is starting to get corrected. In fact, I pushed out a chart sometime last week, wherein, if I plot the India share of market cap, that has now come down from about 4.4% of the world market cap, which it was in, say, August, September of this year. It has come down to close to about 3.6%. As it slides, comes to say about 3.4 or 3.45, which is under 7-8% relative underperformance that India is likely to see, I think those would be extremely good levels for a lot of international allocators to come back into. So yes, in the near term, there could be some kind of a home bias. There are a lot of small caps and mid caps, as you rightly called out, Surabhi, that are quite cheap in US. But I think foreign allocators will not miss up on the chance to reload back on India should we see a reasonably sharp 5-7% relative underperformance from here as well.
Hi, Arish. Good morning and good to see you. Which is the sector, though, that has run its course, which you believe valuations are full and you'd rather take money off the table?
I think, PSUs and defense, that back, even after the moderation that we've seen in the last few quarters, I think still there's been a significant amount of monies that have been made in that whole pack over the course of the last 2-3 years. Clearly, there is earnings visibility in those spaces. I'm not saying that there could be an earnings disappointment, but when they are trading at, say, 14-15 times price to book, the margin of error is reasonably very, very small. And therefore, we think that could be one bucket that sees a reasonable amount of underperformance from here as well. I think there are pockets that are starting to emerge even in real estate, where we've seen significant kind of market cap growth over the course of the last 2-3 years. There has been reasonable amount of overheating in the form of price appreciation, especially when we think about markets like NCR or Hyderabad, etc. These micro markets have seen significant price increases. And therefore, there could be some kind of cyclical kind of a reversal of that sort. And this is again a space which has done very well. That's again a space where we would be watchful for and would want to book out or to reduce our exposures going ahead. The spaces that seem to look interesting to my mind would be, say, metals, cement. These are two ignored spaces. In fact, if I were to look at the market cap share of these sectors, you have to go back all the way to 2001 for metals and 2004 for cement to get the same kind of market cap share. So obviously, the infrastructure build out that's happening in India, I think there is going to be a reasonable amount of metals and cement that is going to be used. The real estate cycle that we are seeing, that's also going to use a lot of these these basic materials. So I think that would be a space that looks to me like a dark horse sector to which monies can be allocated towards.
Look at the market go now, 130 points higher on the Nifty. So we're at about 24,350. We'll have to see, if the strength really sustains, or we'll have to I think we'll have to give it a few more hours. But it was a powerful reversal from about 23,800 yesterday. And that rebound, thankfully, is continuing as we speak. So 24,340 is where we stand. And market breadth is very positive, and I think that is even more heartening. But it's still early. 2,000 stocks are higher, and about just under 400 stocks are trading in the red. Harish, we'll leave it there. Thank you very much for being on, and hope this is the first of many. Seeing you after a while, so hoping that we get an opportunity to speak again and sort of expand on some of those points a little bit more. Thank you for being with us here this morning. But I think we've got the Titan management, Nigel, with us to take the conversation on results forward.
Well, that's right. Well, let's get straight to that then. Titan had reported a weak set of numbers for the past quarter. The profitability as well was impacted by customs duty-related losses worth around 290 crores. Lower demand in the Saltel segment as well did hurt them. We have with us Mr. Ashok Sonthalia, the CFO at Titan, who joins in. Hi, Mr. Sonthalia. Good morning, and always good to have you on the show. Well, before we get to the past quarter's numbers, tell us, how was Dhanteras? How was business if you compare it on a like-to-like basis? And what's the outlook for the jewelry revenue for the remainder of this year?
Good morning. The month gone by, the festives, have gone by. We are extremely satisfied. Not only jewelry, across categories where we operate, watches, all, they have done extremely well. And we are very happy. We are not giving a specific number on like-to-like for the festive season, but it was very good.
There's no sign of slowdown or anything of that. It was as good as you expected, right?
Yes. Yeah. Okay,
and
to the next part of the question, we believe Q3 should be a strong quarter from the revenue growth performance. And looks like Q4 also we are very, very optimistic. And that is where we believe H2 is going to be better in terms of revenue performance, growth performance, as well as margin performance for Titan.
Okay, and we'll want to press you a little bit more on these numbers. But I just wanted your quick comment about the lab-grown business, that's launched under Trent. Some would have imagined that it should have ideally come under Titan. And we saw that in terms of a stock market reaction as well. Titan fell while Trent went up. Your comment on it, why wasn't it put under Titan itself?
So, there is no, the way we play our categories are very different the way Trent would play. Trent is a big box retailer, West Side, and they can introduce whatever they want, whatever their consumer would try to look at it and experiment with that within that big box of West Side. And it makes complete sense for them, whatever price point they want to do. We play our approach different. We are a category guy in a way. We try to build brands. We try to create some exquisite product and then go exclusively for those products. So approach is very different, and both companies are free to pursue their strategy. I don't think there is like, if you know that West Side also sells perfume, but we sell perfume as a category and a skin brand. They also do women's bag, but we do women's bag under Earth and Fast Track brand with exclusive stores. So all those things happen. But LGD is getting more discussed compared to these categories, which is fine.
That's a very gracious response, Mr. Sonthalia, and a point very well made. Yes, you've reminded us there are lots of other categories in which there are overlaps as well. But I'll tell you why this lab-grown diamond debate is a little louder than the others, because I think what we're also trying to understand is whether there is a structural shift at play here. Now, if we look at the share of the studded business for Titan, that share has come down to, I think, 30%. That's what our colleague Mangalam points out, from 33%. Solitaires have not been doing that well. And it's a very real question, right? Especially for some of the entry level or the mid-market studded jewelry. If a customer wants to go and buy something, for daily use, now there is a very real market of lab-grown diamonds. I mean, I think so the high-end wedding purchase for the discerning customer, that obviously is a business perhaps well protected. But what about the rest of it? So give us an outlook on your studded business and whether you will look at starting a lab-grown diamond range as well to prevent customers from shifting elsewhere.
So far, Surabhi, data are not supporting that hypothesis which you just spoke about. Actually, we find some pressure on the high caratage solitaire, where the customers are more discerning, they have a little bit investment orientation in mind, and the way prices have been behaving in the past, they are on sideline. They want to defer their purchase till the dust settles down and they really understand. But as far as the smaller diamond jewelry is concerned, 1 lakh to 2 lakh, 2 lakh to 5 lakh, actually we have seen very, very strong buyer growth, the studded growth. Actually, if you take out the solitaire, our studded growth has been pretty decent, high teen number in this quarter also. If you look at, say, sub 1 lakh category where Mia and Carat Lane plays, and they are largely, diamond, natural diamond player, and their strong numbers are in front of you. Actually, the secondary growth for Carat Lane was 40% plus in this quarter. Mia has also done extremely well. So far, data is not suggesting that substitution is happening or the customer is preferring lab-grown diamond over natural diamond. They might add some of their jewelry portfolio, and I'm not denying that. And but our data suggests that customers who are coming to us, they want to be assured that they are buying natural diamonds.
So as of now, sir, from what you describe, and that's really helpful and good to know that no shift is being observed as far as your numbers go. So right now, you are not thinking of bringing lab-grown diamonds under the Tanishq fold, right? We don't get that sense from you at all right now.
We have been maintaining this, that we are very, very keen observer of this category. And this is a very, very important strategic choice for us, So we would like to talk about that when we are fully ready about that.
But will you do it, sir? Is that a thought process?
That is what, Nigel, I'm saying. We will talk about that when we are ready to talk.
But you're open to it. It's not something that you're entirely writing off, right? As of now.
Examining of the category and close observing the category means that both way our steps could be.
I think Prashant and me, we are close observers when we go to the jewelry shop, right? But we don't buy anything. The BV makes all the decisions.
I have a foolproof formula for that. I will go.
No, then you get into trouble.
But you know what? Just to complete the point, Mr. Santhalia, because all the men, including the ones sitting next to me on the table, they'll always talk about whether diamonds are a good investment or not. So just for the reference, and you mentioned that, right? Because at a solitaire level, prices have been coming down. What has been the reduction in natural diamond prices?
In the small diamond category, there has not been anything which is significant. In large caratages, yes, there has been, if you look at, say, maybe 1 year, 2 year, in our setup, maybe 10%. Overall, maybe even more than that, as far as the market and industry is concerned.
Okay, so that's a fair bit on the jewelry business. Okay, let's also talk about the rest of it as well. Just give us the growth trajectory and also the margin implication, because that's the other big point. I mean, this quarter, you had to deal with the impact of the import duty cut as well. But again, this guidance revision, is it just because of the duty cut? And on a steady state basis, what is the kind of margin that you're hoping to maintain, the blended margin at the company level?
So the guidance cut is after normalizing for duty cut. We do expect that in Q3, which should be the last quarter because of July 23 impact of custom duty cut, we would expect another 280 crore of inventory loss will flow in Q3. So normalizing for that, we have said for FY25 jewelry business should deliver 11 to 11.5 compared to earlier 11.5 to 12.5 number which we had given. It is more to do with the love for gold we always knew that Indians love gold, but now it is more pronounced. And that is what we are seeing that, and this is the product portfolio which is putting pressure on the margin. Of course, gold prices being very high, there are all sorts of competitive actions are also happening on exchange, on gold price being very tight, so people are trying to entice customers. So some of those actions, but it is more product portfolio.
Okay, all right, Mr. Sontalia, very quickly, a couple of numbers before we let you go. Carrot Lane, I think it's doing margins of around 7%. I think the vision is to take it to 10%. By when? And also, if you could tell us, if you could give us studded sales as a percentage of the total mix, it had come down. Do you believe that it will hover around these levels, or do you see it get back to that 30-32% odd?
So the Carrot Lane should inch up towards 10% to my mind in 2 to 3 years time period for sure. As they gain scale, operating leverage would kick in, and I think whatever actions they are taking on their cost side of it should take them towards double digit. Okay, so that's a 2 to 3 year time frame I would put it. As far as the studded mix is concerned, in this quarter it is 30%, and I expect likely to stay there because at this point of time, the preference of consumer towards gold jewelry and gold coins is far more pronounced, and it is unlikely to shift so soon. So we would keep it that way right now.
Okay, we look at a few listed companies. The smaller ones are growing quite well. Competition definitely is picking up. I think you have roughly around 8% of the market. Are you holding on to your market share? Because your vision is to get, I think, to double digits in the next few years. So are you outgrowing the industry and holding on to your market share?
We are holding on to market share as far as FY25 so far is concerned. And we still believe that our ability to keep inching up towards 10% by, say, FY27 is there. Largely the share is coming to organized player from unorganized. So some of the listed player or some of the data which comes in the market doesn't give you the complete picture, which is largely still unorganized sector. So I think we still believe that towards 10% journey would happen for us.
Okay, Mr. Sontalia, pleasure listening to you, sir, and hope to speak with you again soon. Thank you very much for being here on CNBC-TV18. That's the management of Titan with Perspective. Stocks down about 3% or so. Well, let's go back to Parishit now, who's looking at some of those swing states. Remember, counting is still on. It is still early hours, but trends are looking more favorable for Donald Trump. Markets, of course, have been trading Trump 2.0 for the last many weeks, and that has kind of intensified this morning again. Dollar, rates, US futures, all of those indicating. But let's look at the most important swing state of Pennsylvania, because it's got the largest number of electoral votes. Parikshit is here to tell us what's going on there. Parikshit, over to you.
You know, Pennsylvania is extremely important, and I'll just come to that in a second. But we have to speak about Iowa. Now, this was a state where Kamala Harris was projected to win just about 2 days ago by at least 3 percentage points by some of the most renowned pollsters in the US. But here we are seeing an upset, so to say. Donald Trump is projected to win in Iowa, according to the NBC poll. So the polling closed in Iowa some time back, and Donald Trump is now projected to win in that state. Coming to Pennsylvania, as you rightly said, this is the state which has the highest number of electoral votes at 19 in the Electoral College in the battleground states. Now, this is a state where every Democrat candidate since 1948 has been winning to go to the White House. So it makes it very crucial for Kamala Harris. It remains a toss-up as of now, according to the most recent projections and polls. No clear winner here. 52% of the estimated vote has been reported. Trump is leading by 1.9-point margin in Pennsylvania. This is a very thin lead. Biden had won Pennsylvania with 50% of the votes, and Trump got 48.8% of the votes. Biden had won Philadelphia County by 81% votes in 2020. So Philadelphia County in Pennsylvania was where Biden had done the best in the last election. Trump, on the other hand, had won Pennsylvania in 2016 with a thin 0.7-point lead in 2016. Trump won 48.6% of the votes, and Clinton won 47.9%. Trump's pitch to voters in 2024 has focused on the economy, immigration and crime in Pennsylvania. Harris has promised to improve the care economy, protecting abortion rights and guarding democracy as well. So Pennsylvania, very interesting battle, and it will be the state which can finally reflect the mood of the nation.
All right, Parikshit, thank you very much for that. That's an important one as we track these US sort of election results which are starting to come through. As I said, and I repeat, it looks like, it doesn't look like there are the chances of a blue sweep, I think, are very, very low. What about a red sweep, a Trump sweep? Markets are trying to price that in. It's possible looking at, the leads that he's got in some of the swing states, but it is still early in the night out there in the US. As more votes start to come in, it's important to keep that in perspective. We'll take a quick commercial break here. We have Abhijit Roy, MD and CEO of Berger Paints, joining us to talk about second quarter results. Stay tuned.
Welcome back. Well, the numbers are still coming in as far as the US outcome is concerned. So in the meantime, we're continuing a lot of the corporate commentary. The next company on our radar is Berger Paints. Now, Berger saw a slightly soft quarter, second quarter gone by. That's because, of course, there was a heavy monsoon impact playing out across large parts of the country. But how are the trends looking like now, the festive season and beyond? We have Mr. Abhijit Roy, MD and CEO of Berger Paints, joining in. Mr. Roy, thanks very much. Hope you had a fantastic festive season from Durga Puja right up till Diwali. So tell us, how good has it been now? Q2 being sluggish is not a surprise. The bigger question is, how has Q3 shaped up, specifically the festive period?
So it was a good October. We had a good collection. In fact, slightly surprising in terms of the collection amount. So whatever material that was there in the system possibly has been sold out, and we had a minor growth in October as well. I think November, December we are well poised for a good growth.
All right. Hi, Abhijit. Good morning and good to see you win. Well, could you quantify that? For quarter three, should we be working with high single-digit growth and then double-digit in quarter four? Would that be a fair ask?
Yes, we expect that, that's how it should be. In terms of volume, we will be around 8 to 10% possibly in quarter three, and quarter four definitely double-digit because the bases are on the lower side in quarter four. And in terms of value, it will be in the high single-digit. In quarter three and quarter four, we are hoping that it should be double-digit.
So what does that translate into when we talk about full year numbers? With a stronger second half, for full FY25, what would the volume growth be? What will be the total value growth? And maybe some idea on revenue as well.
If what we say translates into reality in quarter three, quarter four, I think we should have double-digit volume growth by the end of the year. The value growth will be slightly less because of the price decrease effect, which had bothered us right for the first 2 quarters quite a lot. There was a 5% cut last year, which we had taken. So value growth will be in single digit, mid to high single digit, and volume growth will be possibly in the double digit, definitely.
All right. Abhijit, hi. Morning. Prashant here. Is there, the dominant kind of across the board paint companies and otherwise, the narrative or the talk has been that the consumer spend is actually slowing down a little bit at the margin. Are there any indications at all? It's all relative, incremental, not in an absolute sense. Are you seeing any of that?
So, I would say there is a slight slowdown possibly, because if you look at our volume growth, overall for the first half, it's around 8%, so normally we do about 10 to 12%. So from that perspective, if you look at it, yes, there might be a slight slowdown in terms of the growth rate by about 2.5, 3%. So that's about it. It's not a dramatic thing happening. We are more bothered by the price cut, which we had taken last year by about 5%, 5 to 6% almost, and that has been bothering us, because you see a volume growth, even at 8%, our value growth remains at, 2, 3%. So that's what is, impacting the paint industry more. I think, that will reverse partly in quarter 3 and, quarter 4, it will become positive. So that's why, we are quite upbeat that quarter 4 results will be quite strong. Quarter 3 will be also much better than what we have been doing so far.
Mr. Roy, Akzo Nobel wants to sell out its India business. Would you be interested?
So, it's not clear as yet, what they are up to. It's a professional company. I'm sure, they have to make up their mind first and, come into the market with their proposal. We will take a close look at it. Nothing is ruled out. Of course, everything matters in terms of what the valuations are. Is it justified? There is a lot of synergy there, but, also there is, we have to keep in mind the valuation part of it and then, discuss and decide, whether it is worth going for or not.
The valuation that's doing the rounds, at least what we picked up, they want to be valued at anywhere between $2.5 to $3 billion, I think. I mean, it's pretty big. So I don't know, but what is a strategic war chest you would keep in mind? Even if you look at an acquisition, if not Akzo, if anything else, what's the size that Berger would be okay to digest at this point in time?
No, we have always gone for, small acquisition. We don't go for this big type mergers. We haven't done anything like this, and in this type of an opportunity hasn't come either, so difficult to comment on at this stage, because, no, but we will look at it, as and when it comes, we will look at it and closely and decide then, what is the best course of action for us. As of now, I would like to keep it at that way. Unless things are clear, it is very difficult to comment.
If it is too large, then maybe you'll have to team up with the PE or something. So we'll see how that goes. But your sense, CCI will approve it if you're interested?
Yeah, in our case, Competition Commission should not be an issue.
Not problem.
Because it's very, it's a small percentage and, it doesn't impact us. It won't be monopolistic for us for sure.
And your margin outlook, you've given us 15 to 17%. There'll be an inventory impact on business in quarter 3. So it takes into account that even in quarter 3, it'll be 15 to 17%.
Well, yeah, the range is that, sometimes it goes up more towards 17, sometimes it goes down more towards, 15, 16. This quarter, it was about 15.7, 15.8. We expect that to improve in the third quarter, and then further improvement should be there in the fourth quarter. So that's how I would look at it in terms of the margin.
Abhijit, we'll leave it there. Thank you very much for joining us, and appreciate you coming on with that perspective. Thanks indeed. Well, I just want to highlight that AP, that is the Associated Press, which typically has called the US elections over the last many decades, they've called North Carolina for Donald Trump. They're saying that Trump has won North Carolina, and this is an important swing state. I think it has about 16 electoral votes in total, and he won it in 2020 as well. Even though he lost the presidential election, but he sort of took it from Biden back in 2020 as well. So that is an important state. Many were hoping, especially those who were kind of betting on Kamala Harris. They were hoping that early on, because votes for North Carolina come in pretty fast, one of the fastest historically as well, and that's come through. But many were hoping that if she wins North Carolina, the path to sort of victory becomes easier. But Trump, according to Associated Press, winning North Carolina, and there's a 3 percentage point difference, by the way. So that is interesting as we look at things at this point in time. So, yeah, I mean, the belief from a market perspective that it is Trump 2.0, I think, gets stronger with this key swing state being called in his favor. I think we've got the management of JK Tyre now joining us. Nigel.
Okay, all right. Well, let's get straight to that then. JK Tyre, they reported a weak set of numbers. Higher input costs and supply chain issues weighed on the earnings. We had the gross margins as well that did see a decline. To help us out with the outlook from here on, we have with us Mr. Anuj Katuria, the President, India at JK Tyres and Industries. Hi, sir. Good morning and good to see you. And thanks a lot for speaking to us here on CNBC-TV18. Let's address both those 2 points. The raw material basket cost has moved up. I think you had indicated as well it could move up by 5 to around 6%. So that was in Q2. For Q3, will it be flattish? Will it be lower? Could you give us clarity on that? Point number one. Point number two is there are supply chain issues which you have faced. Are they now getting ironed out?
Yeah, as far as the raw material basket is concerned, in Q2, we saw an upswing, mainly led by the natural rubber and the synthetic rubber. The good part is that now we have seen that it has come down a little, but this also has to be watched very carefully. We are doing that, and we expect that in Q3, there would be some impact further because there is a carryover from Q2. But going forward, maybe December onwards, things should start softening and the overall raw material basket prices should be in control. On the supply chain side, yes, there were some challenges in the earlier part of Q2. But September onwards, we have seen that the situation is much better. The availability of the vessels, the containers, and also, whatever we export into the Americas, for that, things are much better. And going forward, we expect that the situation will be similar and there wouldn't be much of a challenge. In fact, if you take our Q2 numbers, in exports also we have been able to do quite well. And that has actually been quite helpful in offsetting some of the impact that was there because of the sluggish demand, especially from the OEMs.
Okay, so that's good news. If, RM issues will get sorted out by the end of the Q3 and supply side issues as well are getting sorted out, that's good news. What about price hikes? Could you quantify what are the price hikes you have taken so far in Q3 in comparison to Q2? And on a blended basis, how much higher will prices be?
So we have been continuously taking price hikes. Right from April, we started. So we have been able to, roughly, if I were to quantify it, say whatever has been the raw material impact for the year as on date, we have been able to take price hikes which are equivalent to almost 50%. But yeah, there it leaves the other part. But there again, we have taken another hike in the beginning of November. And going forward, based on the market dynamics, we will be looking at further hikes if they are required. But on the other side, we are also watching the raw material basket. And we will have to balance this out very carefully. And actually, that is how we play it out.
What does it mean in terms of margins? I'm looking at your India business, which is bulk of your total revenues. Out there, the profitability has got hit. So give and take everything, raw material basket cooling off, you have taken price hikes, supply chain issues as well getting sorted out. What does it mean on margins? Last quarter, it was in that vicinity of around 11.5%. How much better will it be for the second half of this year, Q3 and Q4?
So if you look at the EBITDA margins in Q2, we reported EBITDA margin of 12.2%. Yeah, it is down as compared to the corresponding quarter. But if you take the total raw material impact, we have been able to kind of negate some of the, we have been able to sustain the margin mainly because of our efforts on product premiumization, better mix, operational efficiencies, and we also had a strategic build-up of the raw material when it was going up. So all this has been able to help us to sustain the margins in Q2. Going forward, we expect the margins to be better.
But
how much better, sir? How much better? According to your calculations, around 12.2% for the past quarter. So can we expect it to improve, say, by 100 basis points in quarter 3? And by quarter 4, in comparison to what you have done in quarter 2, should it be another 200, 250 basis points better?
See, generally, we are looking at a range of 13 to 15%. That is what is the industry average. And we would definitely like to get back into that range.
So 13 to 15% is what you'd like to get back at on a full year basis. That's helpful, sir. It kind of tells us at least your aspiration level where you want to be. Similarly, as there's recovery in the second half, on a top line level, what kind of growth can we expect? Full year.
Even if you were to look at our quarter 2 results, while the overall top line it was muted. But in the replacement market, we saw a positive sentiment, especially in the PCR segment. We expect that the momentum in the replacement market will continue, and we should expect, even in the commercial vehicle segment, the demand to be much better. Quarter 4 is generally a very good quarter because both OEM demand as well as the replacement market demand is robust. So overall, I think so. H2 definitely will be better than H1. A replacement market, we expect that we will be able to have a high single-digit growth in H2. For OEMs, we will have to wait and watch because there is this element which is there especially in the CV segment, where the demand is still kind of not picking up. But we expect that once the infrastructure spends, which kind of got deferred because of the elections and also because of the delayed monsoon, extended monsoon. So with that now behind us, we expect that in H2, on the back of the infra spends, also on the passenger car side, the festive season has brought in a lot of cheer. So with the pipeline stocks getting clear to a certain extent, we expect that overall in H2, the demand both from the replacement market as well as the OEMs should be very positive.
Mr. Kathuria, we leave it there, sir. Good luck. Thank you very much for joining us, and hope to speak with you soon again.
Thank you.
We'll take a break here. Markets up 170 points. I just want to point out that US futures are at the sessions high. Yields have jumped. Look at the front end of the curve, the 2-year, the 10-year, they're at the high point of the day or the night. I mean, depending on whether you're tracking them here or the US. This is all happening as results start to come through. I think that's a very helpful graphic which tells you what's happening. So it's a 14 basis point jump on the 10-year, but about 4.43. The 2-year is up lesser, and the dollar index is up about 1.5%. That is almost 105 on the US dollar index, which is coming through. I mean, that's going to be, traditionally, historically, a very strong dollar is bad for flows into emerging markets, especially, and of course, stuff priced in dollar terms, commodities, for example. But we'll have to see. This is still very, very early sort of reactions which are coming through, and some of this will start to percolate back and work its way through to our markets as well.
And the Bitcoin has called it.
75,000 on Bitcoin.
Harris or Trump, one thing we know for sure, they're all going to print and print. Lesser degrees, but I think that is, of course, one of the reasons why things like gold, Bitcoin, etc. have done very well. We take a break. The management of Swiggy, don't want to miss that one. The IPO launches, and we'll have Sriharsha Maheti and Rahul Bothra, the MD and Group CEO and the CFO of the company, join us on the other side. Stay tuned. Well, Swiggy's IPO opens today. It's a household brand, needs no introduction in terms of what they do. The IPO targets 11,327 crore rupees through a combination of fresh issue worth 4,499 crore rupees. The IPO priced at between 371 to 390 rupees per share. We have Swiggy's MD and Group CEO, Sriharsha Maheti, and Chief Financial Officer, Rahul Bothra. Gentlemen, good morning. Great to have both of you here. Thanks for joining in. Sriharsha, if I can start with you. You know, you'll have a lot of fresh capital with you. How do you plan to use it? Will it be used? Will you use it to regain some of the market share that you've lost in the food delivery business? Or will the majority of it be used on the quick commerce side? Sriharsha, can you hear me? I don't think they can hear me.
Yeah, so I can take that. Good morning to you and all your viewers.
Yes, please, Rahul, go on.
Yeah, sure. So the primary proceeds that we are raising of roughly 4,500 crores, we are earmarking a large part of it to grow our quick commerce business. As you may have seen from our filings, our quick commerce business has seen a pretty steady growth path, growing at around 122% over the last 3 years. And we do expect to increase our dark store network coverage and also our geographical city coverage, with part of the proceeds. We're also going to use it to penetrate to more number of consumers. Over the last 3 years, we have added 60% more consumers on our platform. And some part of this proceeds will also be used on the advertising and sales promotion to penetrate more on the quick commerce business. The food delivery business itself has seen pretty steady growth. We are at a mature stage of the category. And we do expect to get a lot more organic users on that platform, which means the overall spending for advertising will be limited for the food delivery business.
Sriharsha, can you hear me now?
Yes, I can.
No, that was a very helpful answer from Rahul. But I just wanted your thoughts, Sriharsha, on this, on what you plan to do, because you have lost share to Zomato in the food delivery service. They are ahead on the quick commerce side as well. What is going to be the strategy? We'll get to the numbers in just a bit in terms of how when you turn margin positive, etc. But just your thoughts on both these segments and what you plan to do.
Hi. So firstly, thank you for having us both over today. I think what you mentioned is right. I think if you look at the 10-year history of food delivery, I think the last couple of years have seen us lose some share. And I think, however, in the midst of it, we've done a lot of improvements to our strategy execution, and we're starting to feel very good about where things go from here. I think this year especially has seen us do a lot of stuff on the consumer innovation side. I think we've been really, really hunkering down on doing more for consumers from an affordability standpoint as well as convenience standpoint. And that is one thing that I am sure will keep us in good stead as we go into the next few years. I think while Rahul mentioned that it is a mature category, I do think that we have multi-decadal growth ahead of us. And the key for us will be to really, lock down on our strongholds and continue to do more and more in terms of affordability and unlocking new consumption occasions for our consumers. And we're really excited about how it's all coming together now.
Okay, all right. Hi, good morning, gentlemen, and thanks a lot for making life a lot simpler for us. But now welcome to the stock market. So the market will want to understand what's your vision going ahead. Talking about the food business itself, margins are sub 1%. Industry believes it should go to around 5%. Do you believe that's likely to happen? And also, if you could give us an updated market share in the food business between y'all as well as Zomato.
So yes, I think the 1% numbers are right for the last quarter that we had published, and we absolutely do think that eventually the food delivery business will get closer to the 5% mark that you talked about. We've demonstrated that over the last couple of years with operating leverage kicking in and the unit economics as well improving at a steady clip. We feel good about our chances here.
And Sriharsha, if you can put a timeline to it to get to that around 5% number.
I think in our first earnings call, Prashant, you'll hear us start getting into a little bit more guidance in terms of the short term, medium term at this point.
Sure.
Yeah.
Folks, hi, good morning, and great to be speaking with you. Rahul, if you could weigh in on this, because I think no one's doubting the disruption that both you and Zomato, your peers Zomato, have kind of unleashed, and it's here to stay, right? But I think the whole question is the whole path to profitability debate, and Zomato kind of displayed that quite nicely. So now let's talk profits. In terms of the quick commerce business, when do you become contribution positive? And also at a total company level, some idea, I mean, how many quarters down the line are we when we start seeing profits at the EBITDA level and eventually at the PAT level?
Sure. Let's talk about the quick commerce business. As you said, the contribution margin is a key, KPI that we are all tracking. FY23 was a year of investment for us. We increased our network, both in terms of number of stores as well as cities. And we had a negative 23% contribution margin in that year. Now, if you look at the FY24 numbers, that margin, contribution margin shrunk to negative 6% and further down to negative 3% in Q1, in which we have given our reported results. We will give a lot more specific guidance in our first earnings call. You will understand that there is an offer document out there right now. We are restricted from sharing specific guidance, which is not part of our offer documents. So we do expect to come back in our first earnings call to give you more specific color on both the quick commerce business as well as corporate level profitability.
Maybe not a number. I get that you're constrained, not asking for a number, but some time frame. I mean, rough time frames in terms of the road to profitability. Can we get that?
Yes. Sure. See, if you look at our trajectory in the food delivery business, right? FY23 we had close to 1,000 crore EBITDA loss, and FY24 that number came down to like close to break even. And Q1 we delivered the 0.8% positive EBITDA. So platform businesses are subject to a scale. So once there's a certain traction that you get after a certain tipping point, they do generate cash, and which we have seen both in our peer numbers, both locally as well as globally. So you should expect that platform businesses, having turned the corner with the operating leverage at play, with the improved monetization as well as cost levers that we have at our disposal. There are a number of initiatives that we keep running on both the cost and revenue lines. Our operating fixed cost, has actually come down in the food delivery business by 13% over the last 2 years. So there's been a pretty good, I would say, management we have been able to do on the cost side. Revenue, our advertising business again has kicked off really nicely. Over the last couple of years, we have gained substantially both in the food delivery business and the quick commerce business. And if you take a forward view of the trajectory, we will share more specific guidance in our quarterly earnings calls.
No, absolutely. I got that. We have a bunch of other questions. We're out of time. So I hope Sriharsha and Rahul, you'll come back up with us when you guys make it to the market on the listing day, and we can talk more specific numbers. I think you won't be constrained then. Thank you very much, both of you, and good luck with the IPO. It's great speaking with both of you. Thank you. Well, I think we're going to take a quick commercial break here, and we're going to come back in a bit. 170 points, by the way, on the Nifty is where we are at. It's the economy with Lata on the other side, and she'll have Katrina L. of Moody's Analytics and Stephen Englander of Standard Chartered on, of course, what else, but US elections and the implications for global markets. Stay tuned.
Welcome back. A Trump victory is looking a little more likely at this juncture, though, of course, all experts tell us it is still too early to tell. But what does this most contentious election mean for financial markets? I have two experts joining me. Stephen Englander, Global Head of G10 FX Research and North America Macro Strategy at Standard Chartered Bank. He's joining us all the way from New York. And Katrina L, Director, Economic Research, Moody's Analytics, joining from Sydney. So we just have the entire globe covered. It's midnight for Steve, and we are deeply grateful, Steve, that you have stayed up for us. Really thankful. But yeah, you're looking at the early trends. What's the sense? Very good for equities and bad for bonds?
Yeah, well, first let me say that this was one of the few nights that it wasn't hard to accept the invitation because I knew I would be up at this hour and even later. But thank you for inviting me. Yeah, I'd say this, that financial markets have bought not just a Trump victory, but Trump winning the Senate, which actually does look extremely likely, and winning the House as well, which is still a bit more of a question mark. And again, there are a lot of states that haven't been called, but I think what the market is looking at is that in places like Florida, Georgia, North Carolina, Trump is doing much better than he did in 2020. And in many of these states, he's doing better than he did in 2016. And they're looking at the incoming results from Pennsylvania, Michigan, Wisconsin, and saying, well, you know, with high probability, there's no reason to think he's going to be doing much worse in those states relative to his previous performance than he did in every other state, just about that we're looking at. So the market really is assigning like a 90, 95% probability to Trump winning, which is why, other than INR, you're seeing a lot of weakness in financial markets. He put a lot of emphasis on tariffs. You've seen European equity markets really tank in the futures markets, and the euro and a bunch of other currencies under a lot of pressure.
Yeah, you're right. Actually, even the rupee is not as weak as other currencies, but it is at its historical weakest point at 84.20 for a dollar. So it is at its weakest point. We'll have to take that. But what is your sense about, let's assume that this is how it's going to look end of day as well. Then do you think yields go all the way to 4.5? What's the yield trajectory for the end of the year, the 10-year US Treasury?
You know, a lot is priced in. And I'd say that there's less uncertainty about whether Trump wins the presidency. As I said, it seems like a very good bet at this point, even though all the returns are not in. But what I think is going to be most important, I suspect at some point overnight, he's going to make a speech in which he says, look, I won. And the markets will be paying a lot of attention to what he says he's going to prioritize. And, in terms of winning the election, sort of running on tariffs was surprisingly popular in the United States, which is why he emphasized it. Yeah. And if he gets up and he says, tariffs are the first thing I'm going to do, I think we could see markets go further. I mean, more sell-off in equities outside the U.S., more, U.S. yields going up, FX currencies, non-dollars currencies under pressure. If he sounds a little bit more moderate and says, okay, now, I've won a big mandate, you guys have to come to the table and discuss our trade relations, but it leaves room for more negotiation. I think that would be a positive surprise at this point, and we could see markets stabilize.
Okay, fair point. I was going to do this discussion as a what-if scenario kind of discussion, but now I'm going to look at a likely Trump victory because that's what the early results are saying. Katrina, thank you very much for joining me all the way from Sydney. What's your sense in terms of, Asian economies and global economy? If Trump indeed sounds belligerent or emphatic about tariffs, as Steve pointed out, then do you think there is a problem for Asian economies, Chinese economy, global economy?
Yeah, I think it's a huge concern for the global economy. around some of the protectionist policies that Trump has proposed, because, you know, front and center for the trade policy is around, it's an America First policy. That means higher tariffs. So that means higher barriers for the important Asian economies that, you know, really rely on that export engine to fuel their economic growth. So if they're finding it more difficult to get their goods into the important US markets, that's obviously going to have really negative impacts for Asia, certainly. And I think China is the front and center in terms of a target for Trump's policies around trade. And I think that China will be particularly hit. And when we're looking at China's economy, you know, one of the key strengths of that economy of late has really been that export manufacturing engine, while domestic demand has been quite weak. So if they can't continue to push through exports, it's going to be create some significant weakness that China's economy is already carrying. It's really going to add to that.
Okay. From a stock market angle, some Indian investors will be happy because there is always money that goes either to India or to China, or more money going from one market to the other. But Katrina, okay, maybe US exceptionalism is going to be emphasized a little more if it's a Trump victory. But do you think global, usually when the biggest economy in the world chugs on nicely and latest data in the economic data in the US is also good, do you think that's good for global economy actually because global growth won't be affected?
I think it really depends on the time horizon that you're looking. I mean, if we look at the real short term, if we get a quick election result, I think we will see, a temporary boost in markets because, there's been a lot of uncertainty for months that's really, been exaggerated over the past couple of weeks about who's going to lead because the election's been so close. But medium to longer term time horizon, it really does depend on what Trump prioritizes as his agenda. And so I think it kind of remains to be seen. So at this point, we can't draw, tight conclusions, I think.
Okay, so you're not having my global growth is 3%, but there is a negative a negative stance to it because of a Trump victory? No. You're not going to lower any of your rates, growth forecasts because of the victory?
So I think we'll have to really wait and see at this point. I mean, you're right in terms of US economy is an important global growth driver, but it's not the only one. I think that there's China in there as well, which is an important growth driver, and its global contribution to GDP growth is increasing over time. So how China is affected and then how China might retaliate when it comes to a potential Trump victory is what we need to keep in mind, because I think it's one thing to look at Trump's agenda and see what he's proposing, but he won't stand in isolation, and we will see potential retaliation from these major trading partners. And we only need to look back at the trade war, back in 2018 to see how the negative growth consequences for the global economy play out.
Yeah, that is very much my fear, but perhaps that's not a FY24 or even 25 problem. It perhaps is a 26 problem. But Steve, you tell me, how do we play currencies now? How much weakness do you see for the rupee, which will be, in the pecking order, the weaker currencies? I would assume that China will depreciate if it sees tariffs.
Look, it seems to be the risk that if the fear is that the U.S. is going to impose tariffs, that there's going to be a lot of pressure on currencies globally against the dollar. And currencies such as China, Mexico, Europe, which have, Trump has complained about time and time again, those are the ones that the market will focus the most on. I'd say that, there's a set of currencies where you want to wait till the dust settles before you decide that it's going to be, like first order ongoing weakness. And I think that, the U.S. still needs to import, say it doesn't want to import from China, countries like India, other Asian countries, friendly countries in other regions. There will be some trade shifting. On the whole, if you buy the entire Trump agenda, of heavy tariffs, more fiscal spending, which would push for higher interest rates, it would be broad dollar strength. But as I said before, it's not clear he's going to go, grab those policies with both hands initially.
Yeah. No, rhetoric is one thing, and policy is quite another. I take your point. A victor behaves very differently from a candidate. But just a final question. Give me some numbers, Steve. What's your range for the dollar index itself? What's the range for the US 10-year yield and for the rupee?
Well, I'd say this on the dollar. It's still not clear if they get a sweep. The market is pricing in largely a sweep. Dollar could come off from current levels if it turns out that somehow the Democrats get the House. And even if the Republicans get the House, it's, again, a lot of people know the trade right now. And there's been a pretty good relationship between Trump probabilities. So we may not go, the increase in the dollar, say that we saw from October the 1st till now. I don't think we're going to see it from now till next month. So
got it.
I think a lot of it's priced in right now, and you have to be a little calm about how you see markets reacting given what they now know.
Okay. Yeah, I take your point. Perhaps these are the peak rates that we are seeing, and things will adjust and people will take profit. This is an unfinished conversation, and I want to invite both of you after we know the results. Thank you very much, Stephen Englander, for staying up for us. Katrina IL, thank you very much as well for joining us all the way from Sydney. The message is that at the moment, people like Moody's are not lowering any of their forecasts. No upside or downside risk, but there's clearly a US exceptionalism, US growth that can be steadied if Trump comes to power. Dollar index and the bond yields very high now, but perhaps this is the peak and there'll be profit taking after the results are firmed up. That's how it looks at this point in time. Wrap up on Bazaar. Chartbusters coming.